Hi everyone, Phil Seymour here. I'm just waiting for a few more people to join as the system is loading. So I'm just sort of ad-libbing with you for a while. I hope you're all well and looking forward to some sort of summer vacation if you're in Northern Europe or enjoying coverage of the Olympics wherever you are. Right, I think that's given everybody long enough to join the party. So hello and welcome to IBA's Narrowbody and Widebody Values Update, where we'll be discussing the global recovery and asset performance. It's Phil Seymour here, Company President at IBA. Thanks for joining us today. So before we start, some housekeeping points to flag. You'll see on your console various tools to help make the session an engaging one as possible. So for example, you can submit questions to me during the webinar and request further details about any of our services, including asset and portfolio performance reviews. You'll also have the option to submit your feedback on how informative the session was at the end of the webinar. And I'm joined today by IBA's Director of Valuations, Mike Yeomans. A warm welcome to Mike. We've got a lot of interesting topics to discuss and review today, looking at regional recovery, market activity, narrow-body values, wide-body values, and our forecasts and the key takeaways. Before we start, a quick reminder that we provide a range of data intelligence products and services to support the industry, which we've been doing through the aviation cycle for 33 years. That's from our InsightIQ data products, valuations, advisory and analytics, through to our technical and asset management. If you're not familiar with the advisory and valuation services, we have 6 ISTAT certified appraisers, which 5 are senior and above in terms of their category, 1 ASA senior appraiser. We've been voted Appraiser of the Year for 2021. This is the 3rd time in 4 years. And I really want to emphasize that we're really grateful because we know that that award is not made by a panel. It's made by them looking at your votes. So thanks again for your support over the years on that. Our ISTAT team is the powerhouse of our values module in our data intelligence and platform InsightIQ. Again, I do want to emphasize the way that we look at data and how we assess the market and the conditions surrounding all of those inputs that we make into looking at base values and market values. And actually, Mike, I was just going to ask you, we say here that we do 24 value review meetings. Can you just tell us how they're split either by category and the sort of inputs and from the data team that you get on that?
Yes, certainly. Yeah, thanks, Phil, and hi, everyone. So this is really a collective of all of our ISTAT certified and senior certified appraisers. Also, we involve other members of IBA from our asset management, our remarketing divisions, technical divisions. And really, we're pooling all of the data that we gather. Our data team collects a large amount of transaction data. And really, we're reviewing that, discussing that, what we're seeing live, being involved in the market through that technical asset management side. And we'll tend to focus on certain areas of the market. So we may review narrow bodies, current generation, new generation, freighters, engines, helicopters, business jets. So really, we cover all of the areas of the market using the sort of subject matter experts on those specific areas, and some of those that you see on the slide here. So that's okay. Kind of how we approach that value for.
Yeah, thanks, Mike. And I'd say I think we're unique in what I would call the top tier of appraisers because we do actually get involved in remarketing and advisory work in terms of specific aircraft that we are remarketing exclusively. So we do see the real contracts. We do see those numbers. They remain confidential, but obviously they're great data points for us to be using. So thanks for that. I'll just continue with the rest of the deck. So in particular, InsightIQ, of course, one-stop shop aviation intelligence platform. We do recognize the importance of both comprehensive and accurate data, and we apply many quality assurance steps to each and every entry update. Our data stems from over 65 years of proprietary data, which we combine with third-party sources and our award-winning valuations to create a leading aviation data platform. We continue to innovate and combine more data news, analysis and insight with technology to provide clarity and solutions to meet your company's ambitions, and new updates occurring every month. We've recently added MSN-specific utilization figures matched to OEM and flight data, made improvements to our flight visualizations, and added airline group and alliance structures. And our new InsightIQ Carbon Emissions Calculator. If you're not yet familiar with this new product, we can now provide emissions output at the aircraft MSN level, as well as across routes, aircraft types and organizations to support your green obligations to finance or for stakeholders. If you'd like to find out more about our intelligence product, please get in touch using our InsightIQ form on the console. As you can see, we're rapidly welcoming customers to InsightIQ every week, including True Nord and Societe Generale, who've recently signed up to the CO2 Emissions Calculator. We have 17 slides to present today and a couple of polling questions to keep you all involved. So now over to the main deck. Mike, over to you for the control.
Thanks very much, Phil. So we're going to start off with a couple of slides looking at utilization and how we're seeing the recovery out of the back of the pandemic here. So we start off looking at utilization and load factors. On the left-hand side of the screen, you can see the IATA figures. That's looking at May 21 versus May 2019. And you can see after a protracted period of record load factors, we are starting to sort of lift off the bottom of that. And I do expect to see when the June figures are released in a few weeks or couple of weeks, we're expecting to see some positive movements in terms of those load factors. When we look at the overall market recovery, if we look at the right-hand side of the chart here, you can see passenger flight trends. This is looking since December 19 through to July 21. Obviously, we're not at the end of July yet, so we have the full month figures, actual figures until June, and then we have until the last month of July, last week, sorry, of July, and we have used that trend that we've seen through the start of the month to forecast where we expect to see July after the weekend, essentially. And we can see some positive trends. Domestic recovery in flights domestically, but also internationally, and we can see that the share of domestic flights of the overall number of flights is reducing. So that dipped below 80% of flights for the first time in June. We expect to see that dip below 75% through the end of July. So that's certainly positive. We're seeing some of that international recovery. Markets like Europe, where you're starting to see restrictions lifted, quarantine requirements eased. That's certainly having a positive effect. When we move through into the next slide, we look a little bit at how those different world regions are performing and how the different classes of aircraft are performing. So on the left-hand side, this is similar principle, actuals through to the end of June, forecast through July. And you can see really that there has been a surge in that European travel in terms of that demand, in terms of the number of flights. We saw that uptick in June. We've seen that continue to rise through July. So that's probably the biggest gain, although it's not the highest compared to the pre-pandemic levels, which we're referencing against the same month in 2019. But certainly a positive story there. North America and Latin America have continued those upward growth trajectories. North America is still really the biggest sort of success story in terms of the number of flights that are returning there. Where we've perhaps seen a little bit of stagnation and a plateau in Asia Pacific, there's still a lot of ongoing travel restrictions. There's large numbers of cases of coronavirus in places like Indonesia. So there is still some restriction, that's holding back some of that growth in the number of flights. Middle East continues to grow, but somewhat slower pace given the reliance on the international travel. When you look in the middle chart, that's really comparing the different asset classes and how the utilization of those has changed since the same months in 2019. You can see the regional jets, those are really recovering in terms of the number of flights, and that's really linked to the growth story in the US. We're seeing a lot of recovery there, see the main proportion of the world fleet of regional jets being in the US. Narrow body, I think certainly some of that positivity in the European markets there flowing into extra utilization narrow body aircraft. Unsurprising that the wide body is lagging behind, given that long haul intercontinental international travel is still being slow to recover. I think the turboprop as well has been somewhat slower to recover there. I think that's somewhat linked to some of those markets. I think Europe and Asia Pacific being some of the key markets there. So I think once we start to see the Asia Pacific recovery more strongly, we'll probably see that turboprop number increase as well. There's a lot of turboprop flights 2019 and summer in Europe as well. So we need to see some recovery there, I think. If you look at the utilization by primary role, so that's whether it's passenger, freighter, we're certainly seeing an uptick in passenger, still obviously much below the 2019 levels. Freight movements still very strong, still above 120, 130% of where we saw those utilizations in 2019. Corporate continues to uptick as well. Really, we're not looking at the whole of the corporate market here. It's aircraft that are based on passenger variants from the main Western manufacturers, Airbus, Boeing, Bombardier. But we're certainly seeing some positive trends there as well. Just going to talk through some of the market activity that we're seeing now in terms of some of the transactions. So what you can see here is the 2021 figures up until the half-year point on the chart. We're showing the dots that are connected by the line there are showing where those transactions were in each year at that mid-year position, just to give a comparison of where we are relative to where we would have been in previous years. So up until the end of June, 2021 performed slightly better than 2020. If you annualize those figures, just to times those numbers by 2, you would end up with a number that's slightly below the 2020 levels of trading. But what we've done here is offered our prediction through to the end of 2021 and where we think those total transactions will end up. And that's the IBA prediction line, which is around 3,800 aircraft involved in transactions there. Now, why is that so much higher than the annualized figure? Well, that's largely driven by lessor acquisition and M&A activity, and primarily amongst that, we're talking about the GCAS and the AerCap transaction, which is going to be 900 or so aircraft. So that makes a big impact. What other transaction trends have we seen? Well, the sale and leaseback demand continues. We saw a lot of activity last year, driven by airlines looking to raise capital. I think we'll see lower numbers than last year, but we're still seeing some activity in that area. An area where we do expect an uptick is the ABS. There were very large numbers of transactions with ABS in 2019 and before. That did dip into 2020, but we are aware of a lot of deals that are being worked on at the moment that we expect to come to fruition later in the year. So we expect an uptick there. So will overall transaction volumes exceed 2020 levels? Definitely in IBA's view. Will they exceed 2019 levels? Well, they'll probably get close. If we look at how that prediction is broken out, you look to the left-hand side of the chart here, you can see another chart or another graph which shows you how many of those transactions we'd expect to see. So sold with lease certainly will dominate given the GCAS and the AerCap transaction. We have seen and we do expect to see continued large number of aircraft sold off lease. There are a lot of aircraft that were subject to fleet exits and retirements that were identified through the pandemic, and we're starting to see some of those aircraft trade out. Older wide bodies, older narrow body types, MD-80s, classics. We haven't seen huge numbers of sort of CONG generation aircraft trading off lease there, but we expect to see that increase perhaps through the rest of the year, perhaps into 2022 as well. The number of new leases that have started, I think There was a very low number in 2020. We expect to see that pick up. Already mentioned the sale, leasebacks, and the ABS. The double ETC transactions, there's a lot of aircraft involved in double ETC last year, but there were some big transactions that pushed those numbers up. We haven't seen so much activity in the first half, but we do expect to see some increase there in the second half.
Yeah.
I think we might have a polling question next now.
Yeah.
Have a poll?
Yeah, Mike, I think the before I push that, I was going to say this is clearly GCAS AirCap is sort of going to dominate those figures, and I would say clearly it's in that sold with lease category. But I suppose when I look at things like sold to ABS and the double ETC issue, I still get a sort of a warm feeling that investors still like this space. I think this time last year we were scratching our heads thinking, well, will there ever be another ABS? And there have been, and we know that there are some in the pipeline, which I think that's hats off to our industry really in terms of being able to package and provide investors with enough comfort that those will be managed in a way, and there's probably a flight to quality in terms of the aircraft types and the airline credits involved. So that does set us up for the polling question, which hopefully you'll see on your screens now. We just thought we would limit all of the categories you can choose, but so apart from the AirCap GCAS acquisition, where do you see most trading activity in 2021? Do you see sale leasebacks as airlines still look for cash? Do you see it being based on more M&A amongst lessors, or will it be new lease starts? So those are your three choices. We did want to limit the choice, and please do vote now, and we'll see how those results come up in the next few seconds. And let me just give you the results now. So it looks as if the audience we have at the moment, thanks for participating. It looks like the favourite appears to be sale leasebacks as airlines look for cash. We know there's a number of airlines looking to do that, and I think once airlines have decided on which fleets are going to be a core part of their 2022 and onwards, then there'll be a lot more clarity. But I do think those other points, we do expect to see more M&A amongst the lessors as we go through 2021. So thanks for that. I've moved on to the narrow body values, Mike. So back to you.
Thanks very much, Phil. So we're going to talk now through a selection of aircraft types and discuss value movements. Just before we go through the slides, I wanted to make clear that these are the changes that we intend to make in our mid-year update. So they're not live within InsightIQ just yet. This is just to give you a sort of early indication of where we're heading with some of those values. So we're going to start off looking at the newer generation narrow body, so the Airbus A320neo, 737 MAX families. Specifically in this side, we're looking at the A320neo and the 737 MAX 8 in terms of the market and the base value performance. So we are seeing some positive trends at this end of the market. And we're certainly seeing some improvement in the value performance of the 737 MAX. We haven't made any changes to base value for these aircraft types. These are the newest, latest generation. But market values have fallen through the pandemic. You can see a selection of vintages of aircraft. So we've got 2016, 18, and 20 for the Neo, 2017 and 2020 for the MAX. Now, we were discussing these, although we're talking about positive trends. Of course, the values are still going down, given the depreciated nature of the assets. But you can see that those are starting to fall parallel more with the base value. So relative to the base, they are recovering. Actually, on the MAX, 8, and particularly on the newer vintages of that aircraft, we are seeing values trending back towards base. So that is certainly some positivity, particularly for the new aircraft. There's some strong sort of investor demand for some of the aircraft with good credits there. I think when we talk about the difference between market and base and where do we think that those will realign, I think we're definitely confident that they will do for these asset types. And in our view, we would expect to see that by 2024, perhaps sort of 2023, 2024. So we're fairly positive on the recovery of these aircraft values. Now, to make it a bit easier to see how those values are recovering, we can move through to the next slide. And rather than looking at a specific vintage, we're looking at the age, a constant age analysis. And you can see that the new examples of the A320neo and the MAX 8 have strengthened. So looking at brand new aircraft, that has improved through January and into July for those aircraft. I think broadly across the vintages, you're looking at a sort of 1 to 1.5% improvement in those values there for the A320neo. For the 737 MAX 8, up to 5% sort of improvement for the youngest aircraft and the new deliveries, and sort of closer to 1 for the maybe 1-year-old. The earliest deliveries of the MAX 8, though, have kind of stayed at a similar level. We're seeing some supply in the market there, this ex-Norwegian aircraft. So it's really the newest aircraft where you're seeing those improvements. Despite the stronger improvement of the MAX, the Neo's still holding a premium. There's still some recovery to do for the MAX for those to equalize. We're seeing around a $2 million premium on the Neo compared with the comparable vintage example of the Neo and the MAX there.
Mike, I've got a question for you there. There's been a lot of talk about the Chinese authorities probably recertifying the MAX by the end of this year. So do you expect, will that cause us to improve market value, or have you anticipated that already?
No, it's not an anticipative sort of action that we've made there. It's really based on the data points that we've seen already. I think it'll certainly be positive, and that is still a challenge in terms of the number of deliveries, etc., for the MAX to get those other jurisdictions back online. But I think we'll look and see what data points we see, what transactions we see with those aircraft, how those are financed, how those trade if they go into the Chinese market. So this is very much the current value based on what we've already seen, rather than a prediction of what may happen later in the year.
Yeah, I mean, Boeing seem to be quite bullish at the moment. Their results for the last quarter, I think, were better than expected by most analysts. So I think there appears to be a lot of positive now. We've obviously been waiting a long time for it, but we just need to see how that plays out, I suppose, in terms of numbers coming back online. Okay, thanks for that.
Yeah, I'd agree. It does seem to be much more positive picture with the MAX. It does seem to be shaking off some of that stigma, the investor appetites there, and yes, certainly some positivity, I think, on the MAX. That was really looking at the new generation of aircraft. Now we're going to have a look at the sort of current or outgoing generation, the CO and the NG, and look at some of the trends that we're observing here. So we've got a couple of charts which show you July 2021, the proportion of aircraft active, parked and stored for the members of the respective families. And then we look back at July 2020 and see how those compare. And pretty much across the board, as you'd expect, the numbers of active aircraft have improved and increased. The 737-800 of the NG family has continued to be sort of leader in terms of the number of active aircraft. I certainly think that the MAX being slower to deliver than the A320neo and not having got so far down the replacement curve there has certainly played into that. I think we've seen some positive trends in the larger variants. We've not seen so much availability and aircraft exiting there. So the A321-200, 737-900ER have been well utilized, and we're seeing recovery in the numbers of active aircraft there. That will feed through into some of the value performance that we'll explore in a couple of slides' time. Where we've seen numbers of aircraft stored and the proportion of the fleet remaining high is really in some of those more niche, smaller sub-fleets. Unsurprisingly, the 737-600, 737-900, the A318, they're small populations of aircraft and sort of dwindling down to smaller numbers there, less than sort of 50 aircraft fleet. So unsurprising there that the utilization and the number of aircraft stored is much higher as a proportion of the fleet. If you look at the comments on the left-hand side and the bottom of the screen there, you can see, although there's positive trends and overall we're up to sort of 78% of the world fleet of these aircraft active compared to 67 in July last year, we're still a long way from where we were in July 2019, where we saw almost 97% of the fleets of these aircraft active. So positive, but still a way to go. So how does that feed into our value opinions and how we'll be adjusting our values in the mid-year update? We have seen some softening in the youngest examples of the 320CO and the 800, which we feature on the slide here. In some of our previous updates, you'll see that we'd made more aggressive downward adjustments on the sort of midlife and older aircraft, given that there's more of those aircraft coming out into the market. We're starting to see some pressure from the newer aircraft coming in on the younger aircraft values. So if you look across the range of vintages, on the youngest examples of the 320CO, up to a 10% reduction in market values, no changes to base. For the midlife and older, we've made less of an adjustment. We're starting to see some of those stabilize. You're within sort of 1-2% of where the values were in our previous update on a constant age basis, which is the analysis that we're showing you on the screen here. 800 is a similar trend, but not quite as much of an adjustment in terms of the younger aircraft, perhaps up to 8%, and still within 1% or so of the previous update on a constant age basis for the midlife and the older aircraft. And we're still, when you're looking at off-lease trades, we're still seeing a premium for the 800 in the order of up to $3 million there. We're seeing stronger demand because of the P2F program, and again, that max effect of not having so much replacement. I think once we start to see that the max certified globally, we will expect to see that gap narrowing as you start to see more of the NGs displaced, but there's certainly a premium in the market at the moment. When you look at aircraft, however, that are trading on lease, we don't see so much of a difference there. Really, it's based on the credit quality, on the terms of the lease, rather than specifically the asset. That's certainly something that we've seen over the recent months in the data that we've gathered. So when we look at the larger variants, these are holding up comparatively better, and we do see some positive trends here. Certainly the A321neo, we're quite positive on the aircraft there. Across the vintages, we have made some improvements within sort of a couple of % of where we were last time, but we have seen an uptick there. Certainly the positivity around the A321neo, which we've seen performing very well, that seems to have translated through to the CO aircraft. As we saw in the previous chart, the numbers of aircraft stored have been much lower, availability and fleet exits have been lower. There's some sort of loyal operators that are staying committed to the aircraft there, and of course the P2F program to support values for some of the older aircraft. When we look at the 900ER, still a relatively positive trend, but some softening in values within sort of 1 to 2%. I think again it seems to be a committed operator base and well utilized, but there are some concerns around Lion Air and the new Super Airjet and whether we'll see some aircraft coming out through that sort of transition process. So a little bit of caution on there, but still relatively stable performance that we're seeing on the 900ER. So we'll look out to see what the remainder of the year brings. Will we see more aircraft come out into the market? Will that push values a little further down from where they are at the moment? We'll obviously have to wait and see. But at the moment, we're very positive on these larger members. As I mentioned, we really have been focusing on market value changes. So I wanted to show how market values have evolved with a sort of historical context. So we're looking at the A320ceo and the 737-800 here. We show the base value for a selection of vintages, which is the dark line. The colorful lines show the market value and how that's performed around the base. And then the light gray lines, we show the soft value. Now, where we see values, market values dip below soft or remain subdued and suppressed for a long period, that's really where we start to consider making base value adjustments. And we haven't really seen that soft threshold breached yet for these aircraft types and for these vintages over the sort of life of those aircraft. But you can see that they're getting close to and touching on that soft value at the moment. So what could cause us to change base? Well, if those values continued or dipped further down and remained below soft, if they remained below base with a significant dislocation for a long period, that would also cause us to look at readjusting base value. We haven't had to do that yet, but we obviously are watching out given the level of dislocation at the moment. Now, historically, market has recovered. You can see for some periods, particularly for the 320ceo, the market value has been below the base for periods of 3, 4, 5 years. Those values did recover to base, but we sort of have to ask the question, how many recoveries can that sort of asset and age profile sustain, and how many recoveries will we see? Obviously, there's environmental considerations with a bigger push to more fuel-efficient aircraft, so that could necessitate some base changes further down the line, but it's not something that we're contemplating in the immediate term. I just wanted to highlight that with the slide.
Yeah, Mike, I think I just want to emphasize that obviously the, 20 years ago, as we sort of come up to the 20th anniversary of 9/11, if we look back at what happened to A320 CEOs then, 737-800s, of course, they were the new generation of their time, weren't they? So I think we would have expected recovery. I think this is the big issue for these aircraft type now, is whether they will recover back to base, because they're not the most current of their generation now. We've actually had a question sort of related to this subject, which is why I thought I'd cover it now, because with so many of the, let's say, the older aircraft, older narrow bodies, either being parked up, a decision perhaps on whether that you're going to do a sort of an 18-year check on an A320 or 20-year check on a 737-800. We know that there's some aircraft will go to conversions, but definitely not all. Could we get to a position where there's actually a shortage of narrow bodies? Is there almost an overreaction that we might have had due to the pandemic that actually means we're going to be scrambling around, and we could then see market values of some of the good condition older aircraft, rebound even to above base. It's kind of a question, but we were asked, and I'm not sure I know the answer, but I think I'm sort of thinking, yes, that could well happen if we see decisions on maintenance not happening and engine shop visits not happening. We could almost see a bounce back to above base value, but we haven't seen any evidence yet. I don't know, maybe you just want to agree with that, yes or no, Mike, rather than getting bogged down on responding. But
no, certainly. I mean, yeah, that's certainly something that we might see, and I think the point that you made there, Phil, about the maintenance of being avoided and engine shop visits not happening. That's certainly something we're watching closely, and can see that that can drive a strong uptick in demand for the engines, and we have seen some positive trends in terms of the engine values for that reason of certain types. I think if you look at the 7B, you look at the 5B with the tech insertion engine there, I think we're certainly seeing some uptick in demand and uptick in value performance through the rest of the year, as there will be a shortage, I think. So yeah, some positivity that we might see there. How long that sustains, obviously we'll have to watch. But
thanks, Mike. I'll let you carry on before we're told that we're behind schedule.
Okay. So we're into the wide body values now. And we'll start off looking at the youngest generation of aircraft, and a similar sort of view to how we looked at the CO and the NG families. We're looking at the 2020 July picture in 2021. And you can see certainly the number of active aircraft has increased. The 787-10 has been utilized well really throughout the pandemic. It's a smaller fleet, with a good quality operator base there, but it has kept that top position in terms of the proportion of the fleet that's active. The 787-9 and the 787-8 have around 50 aircraft in storage and some extra aircraft parked. We have seen aircraft availability and storage increase for those. Also the A350 with aircraft coming out from LATAM, we've seen some increases in aircraft coming out there. So we do expect, as we see the international markets recovering more strongly, we expect to see these levels of storage decrease. See, these are the latest generation aircraft. They're going to form the foundation of many operators' fleets for the next 10, 15 years. There's no direct replacements in the wings for these aircraft. So in terms of the longer term performance, particularly of aircraft like the 787-9 and the A350-900, we're certainly positive on the recovery of those aircraft types there. The 787-8, perhaps with an older fleet profile, and so the market having moved more into the 9, would be less optimistic on the 8 in terms of the value performance, I would say. Well, certainly a positive trend, up from about 70% active into 2020 to nearly 86 in 2021. But again, a similar story. We've got to emphasize that we're still significantly down on where we were in 2019 in terms of the number of active aircraft. So what does this mean for values? Well, they have softened on the A350-900 and the 787-9. As I mentioned, LATAM, we've seen aircraft coming into the market on the A350. Norwegian, of course, the 787-8s and 9s coming out into the market. There's still some of the pressure on the longer haul market, so that has caused us to soften our value opinions somewhat further than we had those in our January update. The youngest aircraft are performing more strongly, so you see those within sort of 1% of where we had the market values on a constant age basis at the newest aircraft, up to a 9% decline on the 787-9 for the oldest aircraft, which are around 2014, 2015. We've seen the 350 hold up slightly better, so still within 1% for the newest, but up to about a 5% reduction in values for the oldest aircraft. We have seen some distress scenarios with aircraft coming out from those carriers that have been in difficulty, on 787-8s, some aircraft in sort of suboptimal conditions, physical and maintenance conditions, so expect to see some discounts there. It's important, really important, to take into consideration the specifics of the transaction and the participants in the scenario. So please make sure to speak to whoever you're getting your values from. Come and speak to us and get the proper advice there. Long term, though, for these assets, as I said before, we're quite positive because these are the latest and greatest technology. When will we see the values bounce back? Well, it's probably going to be in line with the international market recoveries, and that's probably going to be into 2024, perhaps 2025, slightly longer than for the narrow bodies.
So base values stayed as is then for those then, Mike?
Oh yes, that's very important for us. So yeah, base values, we've not adjusted base values for the 350-900 or the 787-9, no, it's purely market values. And we would be confident of a recovery there.
Okay, you heard it here first. Yeah.
So for the outgoing generation of wide bodies, it's not quite such a positive message and quite such a positive picture. The 777-300ER we'll look at first. You can see that around 82% of the fleet is active, still 18% parked or stored. Now that's not the worst of all the wide body performance, but some of that activity and some of that utilization has been supported by aircraft flying as temporary freighters. So if you look on the right-hand side of the screen, we show how the number of stored aircraft has evolved through the pandemic. It's coming down gradually, but it is gradually, and there still are a large number of aircraft, over 150 in storage. And you can see the orange line shows all flights. The blue line shows passenger only. So there are aircraft that are operating purely as freighters and have temporarily been converted. There are perhaps some that have not been temporarily converted that are still primarily flying freight around. So that has had a positive impact because of the cargo carrying performance of the 777-300ER. Where there's less of a positive picture is in the passenger demand side. There's very limited placement options for the aircraft. We've seen a couple of aircraft going on lease into Calita, which I think will probably be converted into permanent freighters further down the line. There's still a couple of placements here and there into some of the Russian carriers, as Air being an example there, but very, very limited number of lease placements for the aircraft. We've seen some retirements increase. ANA have retired a number of aircraft, and low transaction values that we've seen there. The maintenance condition has to be considered, but somewhat setting some of that precedent and an expectation for pricing in the market for aircraft that are off lease. Longer term, we're optimistic about the P2F conversion, but don't think it's the panacea, and it's not going to absorb 800 aircraft or so. So there is some softening occurring in the market value performance of the 777-300ER, and the longer term view has softened. When we look at the A330ceo, again, some weak market indications, much higher levels of storage. Over 40% of the fleet is inactive at the moment. The level of storage decline has been very slow, and the recovery in number of flights again has been slow. So the slightly different chart that you see on the right-hand side here, the orange is showing the A330-300, the purple line is showing the 200, and that's showing the flights, the number of monthly flights through the pandemic. There is some demand for the aircraft from startups, but it doesn't seem sufficient to absorb the number of aircraft that are available on the market. We've seen distressed transactions at some very low pricing, and that has certainly weakened the expectations. Again, like the 300ER, there's a freight conversion program, but how many aircraft can that realistically absorb? I think some of the advantage taken out of the low feedstock pricing. And there's still fleets to exit. There's still aircraft to come out into the market here. It's not a great picture for the A330ceo at the moment. So what does that mean for values? How have values evolved for these aircraft types? Well, on the left, you see this 777-300ER. We're looking at a selection of vintages. And the comment that we made around the base value, where we start to see the market value breaching the soft value and dipping below that, that's really when we start to consider having to make a base value adjustment. And it's not the first base value adjustment we've had to make for the 300ER. We have had to, as you can see, those base curves have dipped down since sort of 2019, 2020. But when you look into that yellow circle, you can see once again, the market value has dipped significantly below the soft, and that is necessitating an adjustment to market value, but also base value. And it's a similar story for the A330-300. you can see across all of those vintages, once again, the soft value being breached, the market significantly dislocated from the base. And this base that we're showing here is the base pre-update, just to give you an idea of why we're having to make those adjustments. If we move on to the next slide, this is on the 330 CO, we're showing you the 330-300. On the left, we're showing you how the market values have progressed through COVID and the adjustments that we've made. Those adjustments have been consistently downward on each of the examples. The base value, we made an adjustment in January 2020. We held that fairly steady through the middle of last year into July, but we had to make a base value adjustment in January 21, and we are going to have to make another one in July 21, or in our mid-year update, which will go live in August, but as of July 21. And we're really seeing that in the order of up to about 33%, so around a third of value on the base value. That really is the greatest adjustment. That third is really in the midlife aircraft, because we've seen some quite young aircraft being converted, in up to sort of 8 years, 10 years old. We've seen the ex-Singapore aircraft coming out into the market at 6, 7, sort of 8 years old and trading at very, very low levels. So that's really resetting values and pulling them down really to a low base. And we ask ourselves, what are the realistic recovery prospects? There's a lot of aircraft in the market. There's more to come. So really just taking a bit more of a realistic view on the future value performance of this aircraft type.
Yeah, Mike, just to sort of re-emphasize that there was already pressure on these aircraft pre-COVID. You mentioned January 20 that we'd already made a decision then, and I think, is it fair to say probably similar with the 777-300ER, we could foresee that there was already some pressure in the market. There were going to be a lot of lease end dates coming up in any case. And COVID has just really reinforced that for base value, we probably don't see a way back, even in the longer term, to our sort of estimates of base values back in 2018, for example.
Yeah, it has been a sort of sustained period of pressure, and market values have continued to decline. So it's not a knee-jerk COVID reaction that we're making here. It's something that has been building over a longer period. But as you rightly put, Phil, as you start to see more newer generation aircraft coming in and replacing those fleets, it just makes it more and more difficult to see those values to recover to where they were before. So definitely the 300ER as well, which we look at in the next slide here. We were seeing quite limited placement options, mostly into the sort of Russian leisure carrier market. It's a very high quality sort of flag carrier, top tier operator base that's been using those aircraft initially, and it is a large aircraft. It's difficult for a wide range of operators to make an aircraft of that type work in the secondary market. So with that sort of limited placement options in passenger use and some big fleets with Emirates, we're seeing Cathay exiting, Qatar will exit over the coming years, the 777X will come in. That really does make us take a different view on how the aircraft's going to perform going forward. So you can see both on market value and base value that we've adjusted there. I think you can see sort of similar volumes, 25 to 30% decline in terms of the base values there, sort of 20 to 25% declines in terms of the market values. It's really across the board. And on the 300ER, we're looking at an aircraft now that's really essentially out of production. The last aircraft delivering to Aeroflot there. So yes, so we've seen, as I say, teardowns increasing and an aircraft exiting there, not transitioning into new carriers, which does highlight the limited demand. Perhaps one of the more positives, not be all doom and gloom about the aircraft, there is the P2F program. We'd be confident on that going forward. supporting demand for engines, engine values. That will be a realistic prospect for some owners, but as you say, it's not going to absorb 800 aircraft. So that's the main part of the presentation. Just to run through the takeaways. We're seeing the market recovery play out differently in terms of different assets, and that's guiding the value performance. The difference between the narrow bodies serving the shorter haul, the wide bodies, which are suffering more greatly. We're seeing more of a drive towards efficiency. There's a big emphasis on the environment. That's certainly playing into the newer generation, the MAX and the NEO. We've seen some positive trends there. The MAX strengthening, the 321 NEOs performing very well, 320 NEOs performing well. We're seeing some of that stigma around the MAX being shaken off. It's good demand from investors, and the market appeal is certainly strengthening. Looking to see some of that recertification and the aircraft coming back online in China, so that will only build a more positive picture as we start to see that. We are seeing the international travel lagging behind. That's certainly hurting the wide-body values, particularly the older wide bodies, and there is a lot of oversupply in the large market there with 777-300ER. A380 didn't really touch on that, but certainly a lot of that fleet is still inactive. So on the older types, A330ceos, 777s, we're seeing further cuts to values. Unfortunately, that's not just market value, but also base values that we're seeing impaired there as well. I think we have a polling question now. I'll pass back to Phil, who will have polling.
Yeah, thanks. Thanks, Mike. That's really good. And just we have got a polling question for you just while we sort out some of the other questions we've had. We've had some great questions in, so please don't leave us just yet. This is purely our own market research. Do you intend to be at ISTAT EMEA in Edinburgh, which I think is October the 3rd to 5th? Yes, no, or undecided. We'd really like to understand what your sentiment is towards actually meeting physically. The news, the last 24 hours is, the UK is welcoming EU and US citizens with a couple of jabs. So I'm really expecting to see a strong response on this one, and got a few more votes coming in, but let's see what we've got here. Oh, a very big no. Now, of course, I know a lot of you are actually joining us from long haul overseas destinations, and perhaps the lure of autumn in Scotland, despite such awesome golf, maybe you've decided just not to bother travelling this year. Thanks for that. Now to some Q&A. We've had quite a few questions, which I have answered some of you as we've gone along live. But I think really I wanted to come back to the A330 point, Mike, and let me just see if I can bring up the CEO here. In terms of looking at the values here, I mean, something we're hearing is that this aircraft is actually quite popular amongst some of the startups that we're hearing about. I think in our market update earlier this month, we were talking about over 130 startup airlines. And we understand that Airbus and Rolls-Royce are really putting some good packages together in terms of supporting these aircraft. So, I mean, do you see any chance of that market value coming back up, or are you more pessimistic?
Well, I think you certainly the attraction for some of those startups, I think, is you're definitely getting a lot of aircraft for your money in terms of the acquisition cost, in terms of the lease rates there. So undoubtedly, market values are very suppressed at the moment, and they're still below where we're resetting base to. So I think We're not saying that we wouldn't see any recovery in value performance at all. It's just we're not expecting to see those values recover to where we had base value previously. So, I think we may see some stability in the values there. We may see some recovery in lease rates, but not to pre-pandemic, pre-pressured sort of levels that we were seeing. So, yeah, I think we will continue to see some demand for those startups, and slowly we will see some of that oversupply lift, either through some retirements, some aircraft converted into P2F, and some aircraft going into those new carriers. So.
We actually had a question about whether we think the future A330 P2F program will be matched by the 777-300ER program. Will the -300ER program surpass the A330 freighter conversion program? I did suggest on the response to the individual, I did say it was a bit of a coin toss. We haven't seen I don't think we've seen enough evidence of 777-300ER conversion centres yet. But am I right, Mike? It's really the 330-300 which is best suited to the freighter conversion.
Yeah, that's what we've seen. DHL looking at the 300, so that seems to be the sweet spot. Although we have seen some other cargo carriers looking at the 200. Egypt Air obviously converted their aircraft, but they own those aircraft. But some other dedicated freight operators have looked at the range performance of the 200 and are seeing that perhaps as being attractive. So I wouldn't say it's going to be exclusively the 300, but we certainly expect to see the A330-300 being the most popular for the conversion. And over time, there's only so many 767-300ERs that can be converted. So this family of aircraft really is positioned longer term to take over in that sort of mid-sized freighter role. So I think more of these will convert than 300ERs, 777-300ERs.
We've had a question about the sale with lease projection, because obviously as this graph here showed, the sold with lease on the left hand side, sold with lease is quite a huge number of aircraft. But as we've mentioned, that was taken into account the GCAS AirCap deal. The question is, what would that be if we normalised it without that transaction? Is that about 1,000 aircraft that would be taken out of that line, Mike?
Yeah, it would be around 900 and odd aircraft. Yes, so it would be significant. Obviously, the fly leasing deal as well contributes there. So, yeah, that would be what you would be taking out. So it would be substantially lower, to the tune of. Okay.
We've been asked specifically about A330 Neos. Got any views on those values, Mike, off the top of your head, or would you like to go back after the session?
No. I mean, we're happy to discuss those. I think we will see some slight softening on the A330 Neo values. Obviously, a latest generation aircraft. There's been a slower number of deliveries through the pandemic, but we are starting to see some aircraft delivering on lease. Avalon Air Lease have aircraft on backlog there that are delivering. So not in the same camp as the A330CO at all. We've not made those kinds of adjustments with it being a newest generation aircraft. So
fair enough.
Similar sort of adjustments that you see on the 350s in the second.
Okay, thanks for that. I have been reminded, of course, that with Edinburgh being in Scotland, there might be slightly different rules on who's allowed to come to ISTAT Edinburgh. So, don't. This isn't me welcoming everybody to Scotland. Okay, just to clarify that point. So just bear with me on that. I think in terms of a general question we've had, Mike, which crops up when we speak to a number of people in the industry, is with the impact of ESG and the pressure on emissions, could we see shorter economic lives? Now, we could spend half an hour answering that question, but what's our view at the moment? Are we taking into account that there could be any shorter economic lives, or is it business as usual?
I think that's certainly a possibility, Phil, and it's something that we are looking at very closely. Of course, we follow the environmental issues very closely. We've worked a lot on that in the development of our carbon emissions calculator. So it's certainly something we're considering that may happen, but we've not shortened the economic lives. We've not accelerated base curve depreciation based on those issues. We very much want to be guided by the transactions that we see and the data that we see coming through. So it's something we're watching, but we've not, made a call on that in terms of the future value profiles of those aircraft at this stage.
Okay, that's good. I think as far as there's a number of questions we've had, and we will get back to you if we didn't manage to fit them in during the session. But we are out of time, but I just do want to cover our data intelligence platform again. What are the core benefits? Clearly, fleet and market movements are at your fingertips, understanding historic and future aircraft concentration and operator profiles to spot aircraft acquisition opportunities, combine up-to-date flight information and utilization history to understand how operators are deploying their aircraft, tracking flight activity and geographic distribution of the global fleet, building an aircraft's profile from its ownership history, spec and utilization, and the flight maps, and real-world flight and cycle data, which provides context to the market research for you. You can access flexible aircraft and engine valuations from the 2021 Appraiser of the Year and generate visual, impartial and exportable valuations at the touch of the button to satisfy your accounting or due diligence needs. So plenty to really get your teeth into, and we do really want you to engage with us on this platform. I think as far as the reminding you again, all of the data here is from our online data platform, InsightIQ, and we're a very special offer to review your portfolio using the platform. Do drop us a line using the InsightIQ form or via the feedback form at the end of the session, and do get in touch using the console if we can help you with valuation or advisory services. So thank you all for attending today's session. You'll receive a follow-up email tomorrow with a link to view a recording of today's session and the slide deck. So on behalf of IBA, thanks for joining us today. Special thanks to our marketing team of Melissa, Dom, Ollie, Luke and Chris, who've organised us to present the event today. So thanks and goodbye from us.
Thank you.